Good morning.
Good morning.
Morning, sir.
Don't forget to turn on your microphones. I'm unmuted and we are recording, so if you want to be careful of what you say in front of your microphone for the next 5 minutes.
I think it's better. And someone to fill a person also.
Okay, so it's on the camera thing,
Audio
audio.
overflows turn off, but that's the.
Call the meeting to order. Riders Pension Board meeting, August 29th. Ms. Jewel, will you roll call, please?
Roll call, Mark Lenedy,
Present.
Justin Campbell, Chad Branford,
Here.
Kenneth Sugden,
Here.
Art Leary.
Here.
Okay, we have a quorum.
Thank you. Has everybody had a chance to review the minutes from last meeting? Any questions?
Make motion to accept. I second.
Motion by Lenedy, second by Sugden. In favor?
Aye.
Motion passed unanimously. Up next, Capital City, Mr. Madron.
I don't think he has a speaker on.
Looking. Dwayne, we're ready for you whenever you're ready.
Oh, I'm here. Thank
Okay.
you. Okay, good morning. If you could page down a little bit. Let me adjust my screen. So we're looking at the policy review for firefighter plan. And as you'll notice, I'm overweight in cash and a little bit underweight in large cap equities and international equities because large cap equities have gotten expensive and the economy is displaying signs of slowing down. For instance, credit card delinquencies are going up, bankruptcies are going up, auto loans are more difficult to obtain. And so as an abundance of caution, and because cash is paying 5%, which is what bonds pay almost, I'm holding more cash. The rest is about neutral. REITs are a little bit underweight because of high interest rates and because REITs are more volatile than stocks. So in a bad economy, I tend to sort of underweight REITs because of their volatility. There's a lot of uncertainty in that area. It's harder to ascertain because REITs are such a non-homogeneous asset class. There's so many different property types in there that I feel more comfortable in underweighting it until the smoke clears. A little bit, page down a little bit, overweight in bonds because I'm underweight in equities and overweight in cash, which is fine because bonds have become a little bit cheap as interest rates go up, bond prices go down, and yields have gone up. So bonds are in a much better position to protect the fund because there's less downside in bonds at this point going forward because rates have already gone up a lot. If you can please page down some more if there's no questions. Account performance, this is as of 6/30, the last quarter. The total fund on the equity side returned 4.97, equities returned 6, little bit behind the S&P 500 because small cap, mid cap and international underperform large cap. So that part pulled down returns a little bit. If you look year to date, and that's fiscal year to date, outstanding. The market usually comes back strong after a bad year, and it certainly has. Equities are up 22% fiscal year to date, which is, eclipsing what happened in calendar year 2022. So equities have got us back to breaking even from last year, maybe a little more. Still lagging the S&P 500 because of international and small cap. High yield bonds return 9.41. Even so, 9.41 is a good return because rates have been volatile and going up, and usually bonds will go down when rates go up, but high yield bonds act like an equity, so they went up more than other bonds. Real estate is up 7.69. It's up 1.45 in the last quarter. As you see, it's starting to stabilize, and still not as good as stocks because growth companies like Google, Microsoft, Apple, and Amazon grow faster than real estate does. So that's why you see real estate not keeping pace with stocks. So we're on the right track as of the second quarter. Again, the second quarter displayed economic weakness. The economy is slowing down. Earnings were okay, but there's definite signs of slowing in consumer spending, and consumer stocks were shaken a little bit. What's driving the market so far has been large technology, especially the artificial intelligence theme. That's been keeping the market going. That's starting to slow down. And we're trying to figure out at this point which stocks are going to take the place of technology. Is it going to be healthcare? Is it going to be banking? So the stocks have gone up so fast this year that going forward, it's going to be slow. If you page down to the next page, you can see the results as of July. July was a good month in the stock market. So you'll see year to date's up 22.71, which is a little better than the end of June. 26.7 year to date for your equities. Still a little bit behind the S&P 500 due to small cap and international. High yield bonds were up 10.6, which is outstanding. And then real estate, 3.2 in the last quarter, but 9.9. So it's coming back strong. And cash, for the last year has paid 3.65, and that's a reflection of treasuries and our money market fund now paying 5%. So there's no questions on that. We can page down to the asset allocation, which is, keep going down to the asset allocation. I think that might have been an additional page. There we go. So you'll see we're at 60% equity, which doesn't include the private real estate and the private infrastructure. So if you include those, we're getting closer to 70. So we're up. We have a lot of equity exposure. And as an economy improves and comes out of this doldrum of rising interest rates, I definitely want to have a healthy dose of equities. Do you want to page down a little bit more, Jill? You see the mutual funds that we use. And keep going. There's a section on the high yield bond manager. The high yield bond manager review. You'll see it coming up. Okay, so high yield bond review. I looked at the top 5 largest high yield bond managers in the universe, and I'm looking at Vanguard, and I'm trying to find if there's a better alternative or maybe another manager that could be added. And the returns are very similar over time for all of them. Vanguard does better in bad times. Their fees are a little bit lower. Fidelity had the best returns, but they take a lot more risk, and so there's more volatility there. So there's a lot of data in the next 4 slides, but my conclusion is that there wasn't thunder and lightning enough to make a change. I don't see at this point a better manager. I looked at index funds. A lot of index funds don't follow the US high yield bond index, but Vanguard does track it. So if you use an index fund, you might end up with more tracking error to the strategic model benchmark. Page down a little bit more, you can see the other results of the review. There's all the managers. They tend to run together. Fidelity was the best, but they take more risk. Keep paging down. Here's a chart on equity corrections, bear markets, and treasury rate spikes. And equity corrections, Vanguard held up real well in a lot of them, especially during the Fed tightening. It fell less than the others. And so you can see coronavirus, tech bubble. You can see the China slowdown, the global sell-off. There's different time periods that let you see how Vanguard holds up compared to the others. And because they tend to hold higher quality high yield bonds, they don't fall as much. So again, not enough data to really make a change. So I think Vanguard has been a good solid manager so far. It's hard to beat the benchmark, but they're the closest to it. They track it well. They're right underneath it. So, and they tend to beat it in bad times. So page down a little bit more. I think that might be the end of the presentation. And one more slide on risk statistics. On a risk adjusted basis, all the managers over 10 years are about equal. So again, not enough real hard evidence to make a change. Downside capture, decent for Vanguard, and upside was very good. So they protect the downside, and they also capture a little bit of upside versus the Bloomberg aggregate, which is a generic broad benchmark for bonds. That's really all I have to say. Are there any questions?
Any questions, sir? We'll entertain a motion to accept the report as given by Mr. Madron.
So move.
Second.
I second.
Second by Sugden. All in favor?
Aye.
Aye. Thank you, sir.
Thank you. Thank you for being a client.
Up next is Mr. Burgess.
Good morning. Can you all hear
Morning,
me?
sir.
Good morning. Let's see, Jill, could you kindly put up the investment policy, the one that's being proposed today?
Hold on. Burgess, I think I just shut it down. Let me go find it.
Could you take your time? While you're doing that, I will give the members of the board and guests today a little update on House Bill 3, which your attorney, which Anna gave you a good explanation about at the last meeting. The governor signed it. There was language that needed to be incorporated into your investment policy, language that your attorney helped prepare, and she was nice enough to provide us a copy of it. So Jill, if you'll go to page 9, please. Oh, okay. You'll see under section 18, Florida statutes, where it is, where it starts with the board and its investment managers shall comply, et cetera. And then definition A, B, C, and D. And I think Anna went over this very well last time. Anna's on the line, but essentially the the direction we have from the governor is that pecuniary standards or factors, that is making the most money we can at the least amount of expense, is the primary objective here, and any social or environmental ESG type of considerations will be secondary. And that's kind of a quick summary. Anna, do you want to add anything to that?
Yeah, I think, that's the main point. Basically, overall, I don't think it's going to really have any effect on the board's investment managers. I think, they're all focused on making the most amount of money, with the least amount of cost and the least amount of risk. But it may change the language that they provide in their materials, because some of them do mention, that they will consider these factors, and they can consider them, but, all else equal, they can't make a decision based on ESG factors. So pecuniary factors, number one. But like I said, moving forward, I don't think it's going to really affect the board's strategy at all.
Okay, so we would agree with that. So the pension office in Tallahassee is preparing a set of guidelines that we will have to comply with in reporting. I think the first report's due at the end of this calendar year, 12/31. We don't really know what's going to be in this requirements. We're all waiting anxiously to find out exactly what the state wants us to do. We'll keep you apprised of that. I think your next meeting's in November, and at that time we'll have more insight as far as what the state is requiring in terms of, I guess, verification that your managers and the program here, Palatka Fire, is compliant with the state, with House Bill 3. So now let's go back to the beginning. Let's go to page 1, please, of this. So while we were changing the investment policy, I decided, let's take a look at the total fund performance right there, that table. How can we tweak this? How can we make it a little bit better to improve performance? And so I'm going to just go over a couple of changes that were made here on this table, and then I'll show you a supplemental handout that I believe that Jill has. The S&P 500, which is large cap equities, that allocation and the target has now been raised to 40% from 25%. We lowered the convertible bond allocation from 8% to 5%. That freed up 3%. We eliminated the REITs entirely, and you heard Dwayne talk about the high vol and REITs. So there's 5% that was raised from that shift. We lowered the international from 15 to 8%. That raised 7%. And we reduced the private real estate from 7 to 2 and increased the bonds from 18 to 20. And really that has a lot to do with what Dwayne just talked about. And that is, we have a 20-year high in bond yields now, over 5%. And it enables you to have more stability and a higher return expectation going forward that we haven't had in many, many years. Now, Jill, do you have that little supplement that was, I believe it may have been sent yesterday. I think there it is. Let's see. Yep. So this, Dwayne and I have talked about this. He's gone over it, and we are in agreement. The current strategy is in blue. That's the blue graph. This is a 10-year history of how that's performed. And the yellow represents what we're proposing. And I just went over those changes: eliminating the REIT, increasing large cap, reducing convertibles and international. Go to the next one, please. This is another way to look at it. The yellow dot is what we're proposing. Higher return and lower risk profile, incidentally, than the traditional 70-30 model. So the dot is above and to the right, which is favorable. And next chart. And there's a pattern. So you look at the last 10 years, the last 5, 3, all these different time periods support moving towards a slightly different allocation in favor of large cap stocks. Are there any questions about that? Do you have any comments, Dwayne?
I would say that your change, Burgess, reflects the new nature of the US stock market and how the larger companies are driving it. And not only that, but they're very healthy companies like Microsoft, Apple, Google. They have a future. 10 years ago, that was different, where you had Merck and Exxon were the ones that were leading. So I think it reflects a different makeup of the S&P 500 index, and which is much, much better than it used to be.
Okay, very good. Any questions from any of the board members? Okay, well, it's important that this be adopted today, namely because of the House Bill 3 language that we went over when Anna opined on. So someone on the board may want to consider a motion to adopt this new policy.
We would accept the motion to make these changes as recommended by Burgess and Ms. Anna.
I second.
Second by Sugden. All in favor? Motion passed unanimously.
Very good. All right, well, thank you. We'll go through my report, my regular report, when Jill has it up on the screen. Jill does a great job, by the way, hosting. Okay. By the way, my firm just went through a very painful 5-month SEC audit, and we had the final remarks yesterday, and the comments were innocuous. We came out with gold stars, and I'm very pleased with the staff and how we got through the process. And frankly, I'm impressed with the SEC's thoroughness. The SEC's big focus right now is on protecting privileged information electronically. And, the industry, the world is now where there are threats that we didn't have 15, 20 years ago. Cyber threats, malware threats. And this is a big focus now on these audits to make sure that investment firms, firms like capital cities and so forth, have more than adequate safeguards to protect you, the clients. Let's go to page 4. Well, I'll tell you what, let's go back to page 1. And the reason why I added page 1 in here, you all know what's going on in the housing market. But the reason why I put this in here, this affordability issue, is that this is one of the reasons why I think the Fed will begin to ease rates back down next year. One of the unintended consequences of higher interest rates is that the people who have a house, who are considering leaving and refinancing, don't want to get a 7-8% mortgage rate when they're only paying 2.5%. So they're not going to sell. So the buyers out there can't find anything on the market. And that's one of the reasons why housing prices have remained so high and the inventory is so low. So I think the Fed wants to improve that situation. And that's one of the reasons why we think rates are going to come down next year. The second reason we see rates heading down is that the inflation controls that anti-inflation policy the Fed's had in place now for over a year, it's working. So we've gone from about 9.5% on inflation down to under 4%. a relatively short period of time. The Fed is doing a marvelous job, I think, in curbing inflation. And hopefully, if gasoline and food prices cooperate, we could go down below 3, to 2.5 to 3, perhaps by the end of the year. Let's go to page 4, please. So this summary puts together everything that Dwayne talked about, and then some of the other pieces. And you can see that for the quarter, the fund earned 269,000, or about just under 3%. Results were about average, and the difference really, more than anything else, is due to the slight underweight to equities and overweight to bonds and cash. The top 3 performers were the S&P 500. That's the large cap index that we're moving more money into, up to the 40% target we talked about earlier in the model. Small cap was number 2, and the convertibles were number 3 at 4.8%. Fiscal year to date, 12.7. That's through June. After June, we had a nice run up. We've seen a little softness since July. A little bounce is, you see some retracing right now, but I would guess that you're probably up about 13.5 to 14% fiscal year to date when you put everything together here. The 5-year average, the 3-year averages are all in that sort of 5 to 6.5% range. The state of Florida retirement system, they're now at 6.7% on their expected rate of return. I should add that the private sector of pension plans, so that's corporations, their actuaries are now recommending raising the expected rates of return. And this, I think, may come to some surprise to some of us in the government sector. And that's primarily because of the higher interest rates or coupons that are being that are available in the bond market. So the bond market now is lifting the expected returns in the private sector. I have talked to some of the actuaries around Florida that like Foster and others that do this kind of work.
Can't hear you.
Froze up.
Yeah. That's his. Yeah. We. You might have to reboot.
He's still going.
Burgess, we can't hear you. You seem to be froze. If you can hear us. Oh, yeah, he's rebooting. He went on. Do you want to move to Anna and then come back?
Yes, ma'am.
Hi, everybody. My main concern for this meeting was, getting that new investment policy statement adopted. As Burgess mentioned, he and I did have correspondence back and forth, so we are certainly on the same page with that. That was taken care of, so all good for that. Just to make a note and expand on what he said, we're not sure of the reporting requirements yet. We don't know if it's going to be, a yes or no sort of box to check in terms of verification, or if, it'll be more a paragraph format. We're just not sure. So as soon as we have guidance on those requirements, we will let you know. I think the next meeting is in November, so we should be in good shape to get everything taken care of before the December 15th deadline of that report. So I think we're in good shape. And I have no other updates on my end unless there's any questions.
Oh, thank you.
Thank you.
We're still waiting on Mr. Burgess, yeah.
Yeah. You want to do the expenses, the quarterly expenses?
Let's go to expenditures.
Nothing unusual in the quarterly expenses. I just need the board to accept them and it's like that. Any questions on the quarterly expenses? Those two little in May contract update. When the contract for the firefighters got passed, there were certain obligations to those who had worked but had since terminated or resigned. So they got more money based on the contract, and pension came out, and pension had to be
I got you.
then returned to them.
Entertain a motion to accept the report from Ms. Jill.
Don't move.
Second by Mr. Leary. All in favor?
Aye.
Thank you. Motion passed.
The meeting dates. Each of you should have meeting dates. Copy of it looks like this.
Where you find them?
Not in there.
They're missing.
Okay.
Hey, Jill, it's Burgess. I'm back.
Okay, thank you. We're just gonna finish this one thing and.
Very good. Thank
Um,
6.
The clerk, city clerk needed these dates on the calendar, on her calendar for next year. I did put them out to the actuary, to the Burgess and Dwayne. And these are the dates we came up with. This is for 2024, so that December 3rd is next year.
Yeah.
If those are okay, then I need a motion to accept the dates.
Everybody good with that?
I make motion to accept the dates.
I second. Second by Sugden. All in favor? Aye. Motion passed. Thank you.
Oh. So right now we've completed 5, 6, and 7. And we can go back to BCA, the Burgess report.
Mr. Burgess, are you there?
Yeah, I'm here. I'm in Savannah getting ready for the hurricane, and some cable guys outside decided to just cut the line. So I'm now on my cell phone. Yeah, you gotta improvise, right? Let's see, if you go back, I'm really I think the highlights in my report, and I think where we're going from here is to, now that you've adopted the new asset model, we'll start making those changes with Dwayne here in the next 31 days. It takes 31 days for that to go into effect. And if there aren't any questions, I guess that would conclude my report.
Have any questions? Thank you, Mr. Burgess. Will somebody make a motion to accept the report as written? Make a motion to accept the report as read. Motion by Sugden. Second by Lenity. All in favor?
Aye.
Motion passed unanimously. Thank you, sir.
Welcome.
What's referred to as budget revisions is also in your packet. It should look like this. It says proposed. It is a budget change for you because the city of Palatka voted to allow a full-time position for the pension administrator going forward in their new budget for 2020 fiscal year 2024. They will, as you look at this, you will see that they will pay 25% of the salary for this person. And the general fund will pick up 30, the fire will pick up 20, and the police will pick up 25. And this is based on mostly the number of people, retirees, as well as current staff, how the split worked out. But the city was willing to pick up 25 because the position is pension and benefits administrator, which means that they would also do some benefits work as far as health, dental for employees as well as for retirees. That what's there is the estimated wages. We have, the city has gone out to the company that did our wage review to slot in this position, but since it was just passed on Thursday, the new budget, Virginia hasn't gotten a response from him yet as far as where it is. This is an estimate, but considering that this person is being hired in January, it's going to be 3/4 of the year. So there's some flexibility in that total wage rate here, because this is supposed to be an annual salary, but we shall see where he slots it. But this is what's expected of each of the boards. The budget, the estimated budget increase is right there. Current contributions are $7,000 from each pension. So for the fire, it's going to double your contribution from 7,000 to 14,000. But the advantages are pretty high to the current employees and to the retirees, to the reporting that has to be done for the state and to the actuary. The actuary bases everything that they do on the accounting that's kept here at the city hall. So
I just have a quick question. Do you know what the majority of this person's workload would be?
75% is going to be pension.
Pension?
Yes, that's what I've been told.
And this person would be available for members?
For members to contact, yeah, for retirees, for current employees, I really expect them to do more work with current employees, having seminars, going out to the different departments and explaining, maybe becoming much more involved in when people are onboarded so that they have a better understanding of what our pension is. Yeah.
Who's the HR director for the city right now?
We don't have an HR director, but we do have an HR coordinator. That's Virginia Jones, and her department is part of the budget as well. She's getting more people to help her with the HR positions. This person would report to HR.
What's their staff level?
One person in HR.
Virginia.
Yeah. But there's been in the budget for over a year now, a second position that has not yet been filled, and it's flowing into the next budget as well. I expect it to be filled shortly, that position, so there'll be 2 full-time, and with this person, it'll make it, primarily pension, but they'll be able to help some with the benefits.
And I actually believe they just, good candidate for that second position. House members.
So if you agree with this and are comfortable with this, then I will need a vote to make these budget revisions in the pension budget.
Are they posting this position?
They will, once they get it slotted as far as what step and grade it needs to be at, they will be advertising it. They're looking to have the position filled by January 1st. It may take 3 months to get somebody in there.
And it will be on the budget in October.
Yes.
So is this an estimate of what we'll have to contribute or just actual?
It's in the budget,
It's in the budget now.
for definite numbers in the city budget. That's been passed. The $50,000 wage is at least for January through September. So in that sense, I feel that that's a pretty good estimate.
They have a tough time finding someone with that expertise in that way.
We're saying,
Oh, good to know.
how do we keep this person? How do we know this person's going to be available for pension members? That's my
Because they're
concern.
full-time here. Not here. I can't say that they're here because, you know, that's negotiation with the person. So many people are trying to work from home. But I would really recommend them be here physically at least 2 days a week, at least. Because they have to be, the whole point of having a pension administrator, to me, is to have them physically present for employees to be able to drop in, make appointments, and talk about their pension and what's
Absolutely.
happening.
Are any of the boards involved in the hiring, like selection?
No, because it's a city position. It's not, you're helping to pay for it, but it's determined by the city. But I intend on being involved in the hiring because I kind of know what they have to do and I'll be training.
I have a question for Miss Anna. Miss Anna, how do you feel about that? What do you think?
I think if Jill is involved, I feel much more comfortable. Especially since it is a city position, but they're only paying for 25%. I think it makes sense to have some input from, the boards that are picking up the other 75%. I don't know how negotiable that is with the city, but I think it's certainly worth some, pushback to be involved, since it is going to be 75%, their job is to facilitate the pension funds. But like I said, if Jill is involved, I feel much more confident, but I still think it's worth the discussion since the city is only picking up 25%. But again, I don't know how willing they're going to be to, have that discussion, but I think it's worth a try.
And I could approach Jonathan on that and see if select a person from each pension
Yeah.
be involved in the hiring process. I can ask Jonathan, this
Yeah.
interim city manager, how he feels about that.
Yeah, that makes sense. That makes sense.
Have they determined this by? I know the firefighters have a lot less employees than the city as a whole.
Yes, they do. And firefighters have less retirees as well, which is why the 30% goes to the general of the wage. And the fire has the smallest percentage. realistically, it's, even though the general has a ton more employees, they tend to not be involved in the pension as much as the police and the fire. So I know that the police and the fire take more attention than the general, which is why this position should build up the general employees, you know, work with them and help them and understand. But, and the wage was pretty based on what I get paid, honestly. So I don't think it's that impossible to find somebody at this price range.
And we need to agree to this today, you know, for budget considerations in October.
Yes.
Yes, and because our next meeting is really, we want to be hiring by then.
We got to have somebody in training, right? I mean, essentially,
Yes,
so.
that's
Any further questions?
my goal.
Any questions?
My concern is, say we hire them, which I know we need someone. The city's so busy. How do we know they're not gonna get bogged down doing a whole bunch of other stuff? Not focusing 75% on pension
pension.
stuff? Like, is there any accountability, or how do we check that?
Sure.
Yeah,
You
have-
want to sit here so you can talk, well, they're online, so you need to have a microphone.
Ms. Cardy has joined our meeting, the finance director.
Okay, good morning, everyone.
Morning.
Sorry, I was in some other matters. I was gonna say that in this year's budget, we have just put this in as a proposed new position. And so this individual will be solely working on the pension and benefits administration. Jill is correct that when they're sitting in the office, there is a possibility that they might help a little bit with payroll responsibilities, but that is not the intent for this position. And so to address your concern about how do we know if this person, you know, will get involved with other situations, they really should not.
Okay.
In this case that we're moving towards in the future. I don't know. Jill is a super multiplicity, multitasking, a wonderful person. And yeah, she's been able to hold down the fort on many fronts. But we're moving towards a better operation at this time.
Any further questions? Thank you, Ms. Cardy.
Hi, Mr. Chair. This is Valeria Thomas.
Hi, Ms. Thomas. Hello.
How are you?
Good. How are you?
Good. I've asked Ms. Jones also to step in and speak with you if you have any questions of her, who is our HR.
Yes.
Okay.
Hi, Ms. Jones. Good morning.
We have been discussing the new position in the budget for the pension administrator, pension and benefits administrator. And that 75% of their time is supposed to be spent on the function, which is what the pension boards are asked to pay. And we just want some assurance that the position isn't going to be overwhelmed with HR.
The position was created for the pension part. The benefits part is just simple things like insurance renewal, just making sure that get there. So there's a coordinator that takes care of the HR as well as myself portion. So that's not a position that's created for HR because it's pension and benefits, it's under HR. And that's the only really correlation to that, so.
Any further questions? We're ready to vote. Come up, Suzanne. Entertain a motion to vote. Fun in this new position.
Motion to accept. Public resolution as the board.
Second.
Second by Sugden. All in favor? Aye. None opposed. Motion carries. Ms. Jill.
Thank you.
Thank you, Ms. Jones.
Probably need to give her a raise.
Yeah.
Final thing I was going to talk about is remind you that there's a pension conference. And if you need any information on that, I'll happy to resend it to you guys. Chad, I know you're going. I believe
Trying to.
okay, you're trying to go, okay. And Commissioner McCaskill is going as well so far.
I will be there as well.
You will be there, Anna?
I will be there, yes, one of the days. And I think a number of attorneys in our office will be presenting as well over the 2 or 3 days.
The final item under other business is the state of Florida 175, 185 money. The 175, which is your money, is from the state is $71,357. Last year it was $61,000. So it has come up nicely.
That's great.
And that reduces the city's contribution, expected contribution this year by $10,000, which is nice. It offsets. And that's all everything that I have for the meeting.
Anyone for public comment?
No.
Motion to adjourn. Motion by Kennedy. Second by Mr. Leary. All in favor? Aye. Meeting adjourned.
This is Burgess. Can you guys hear me?
Yes.
Sir.
Did you talk about the training that we could do at the city at the next meeting?
No,
It's
that
at
was
the
on,
edu-
yeah,
the
that was on the
education.
agenda.
Well, the
Which-
meeting's been adjourned. How do you want to handle that?
Do you want to open the meeting again and talk about a date for the training?
It's up to the chairman. Let's take
Yeah,
2
let-
minutes.
Yes. Ms. Jill, what's our next step? How do we reopen?
Well, we know we have roll call, so I would just say you're amending the adjournment and readdressing an issue with
We're,
the permission of all the other.
we'd like to
Okay.
reopen the meeting with the permission of the board for a missed agenda item. Any-
Reopen the meeting.
Motion by Sugden. Second by Leary. All in favor?
Aye.
We'll open the meeting again at 10:53. Thank you
Okay,
for bringing that to my attention.
Sure. This is easy, take a very little time. We have a education piece that we presented at the Florida Public Pension Trustees School. I'm happy to bring that with me, and at the next meeting, we should have the police, fire, and general boards participate. It'll only take about an hour. Anna can do a 15-minute on whatever she wants to talk about, maybe the sunshine law. And I've talked to Dwayne, and Dwayne can do a couple slides too. So over lunch, we can talk about, you can get educated, and that'll meet your education requirements.
That would be great. So that would take care of the need for pension conference at a later date
Yes.
and time.
And save you a lot of money and time driving down the terrible roads in Florida.
Is this going to be, will this be an annual training, sir? Is this something that we can continue annually?
I work for you, so whatever you whatever you want me to do, I'll do it.
Great. That's scheduled for next meeting, Ms. Jill.
Yes,
Perfect.
lunch at next meeting. I'll send it out when I send out all the information and the reminders.
Jill, can you just tell me the date if you have it?
Yeah, I don't have, I'm just looking in my book and I don't have it. I know it's in November. But I
Okay.
think it's the 29th, but I'm not positive. I will update that.
It's Black Friday.
I'm gonna look.
It's the 28th.
28th, okay.
All right, so I'm not sure you need a motion or not to go forward with this. It's up to you.
I think it sounds great. I think we'll plan on it for the next meeting.
Right, I don't think we have to have a motion, but to just have lunch and some training.
Yeah, that sounds great.
Okay,
Is Dwayne still on the line?
yes,
Yes,
So you and I can huddle up before to decide on what you want to bring and how we can collaborate, and Anna knows what to do, so. What do we think we can, what do you want to budget an hour? Is that enough time?
yes.
well, the one meeting, this meeting is usually over by 11. And then the next meeting starts at 1:30 for the police. So we have 11:30 to 1:30. We have 2 hours in there, but we'll have a lunch as well during that time period.
Okay, that's good. I think an hour is too tight, especially when the lawyer is involved. That's a joke, Anna.
So we should have at least an hour and a half. We could in there.
Okay, the last
Sounds great.
thing I wanted to mention to you is that investment policy that was approved needs to be signed by the chair. And it needs to be signed. Do you have the signature page?
Yes, he's already signed it.
Are there any places left to be signed? Who signs it? Just the chairman?
I don't know if we could hear you, Burgess. Could you repeat that?
Yeah, is it just the chairman who signs?
Yes, it says Board of Trustees, City of Palatka, the chairman. Yeah.
Okay, perfect. And does it have to go before council for approval?
It says attest by. It says Sawgrass has to sign it, you have to sign it, Capital City has to sign it. Would the
Okay.
attest by be what we're looking at as council? Anna?
Yeah, so just, if you would, just
Yeah.
circulate it to all
I
the,
think I'm sorry, go ahead.
just circulate it to all the parties who need to sign it, and we'll take care of that part. Get everyone to sign it.
Sure.
All right? That's all I have.
All right.
Thank you, sir.
Thank you.
Motion by Leary,
Second.
second by Sugden. All in favor? Aye. Thank you, guys. Appreciate it.
Thank you.
Everyone.
So November then.
DC?